Hello, hello. Good morning, traders. Welcome to the Flow Show. We write Tuesday, 30th of July, and here we go again with our daily show. And today we'll have a bit of a special looking ahead at what the Bank of Japan will bring, amongst other things, of course, as usual. And let's straight away kick off with some announcement that we had by the US Treasury. And they came up with, for them at least, some pretty decent news that they can borrow, or they will need to borrow a little bit less because they have a few bit of money left in the accounts. Also expected the final numbers to come down a little bit by the end of the year. Cash pile to be a little bit lower. There is a bit of anticipation in that number, though, and that would be that the Fed reduces the QT speed that they are going at right now. So, I mean, there may be some little unexpected, how shall I say, fine-tuning to be done later on. But for the time being, it's relatively good news for the Treasury. This being said, it did not change the yield sphere that much. And so we will see what kind of maturities they will look at tomorrow, which side they will go the most. And I just realized that I forgot to talk about the what I should have done at the top of the show about our TFP program. It is expiring. This is ending tomorrow. This July special offer is ending tomorrow. So if you want to take advantage of a 45 minutes one-to-one session with Blake, where he explains everything that you need to know about the TFP, about the ways to help you to succeed, the access that you get to our trading community as well while taking the assessment, which is one of the most active trading communities out there. So then you will need to hurry up because this thing is ending tomorrow evening. Okay, that's done. So back to where we were on the news. Let me just have a quick look to see if my guest has arrived. Here he is. Oh, I lost him. Just bear with me just 1 second. Where's Greg gone? I just saw him in here. Oh, there you are. But are you already panelist or not yet? Let me oh, there you are. There, I promoted you. Okay, let's continue. So that was for the Treasury. Bit of good news there. Didn't impact the bond market too much, though, as most bond traders already expected that they would need to borrow a little bit less. It was a bit uncertain what the amount would be, but anyway, we've got the confirmation there. Elsewhere, we had the Chinese officials coming back on the line. They had a meeting today pledging to help the economy in many different ways. There's still a lot of uncertainties around the what exactly that they will do. But we have to note, and I'll come back to the dollar China a little bit later before we talk about the Bank of Japan. Chinese yuan isn't being sold as much as it could have been overnight because the PBOC fixed the dollar yuan higher at 713.61 and also injected a bit of liquidity. And despite all of that, dollar China is not making too much headway right now. And I'm starting to wonder if this is just end of month, or is the market starting to be a bit reluctant to be very short Chinese yuan? And I'll come back to that a bit later. Yesterday afternoon, we also heard from the UK Chancellor Reeves talking about whatever holes the Tories left in the coffers, that UK is nearly bankrupt and everything. It's not all that bad, okay? But anyway, she said that she would present the autumn budget statement on the 30th of October, that there would be a big review, and we knew that already from messages sent out prior, that there would be a hold in a lot of multi-year public spending stuff, that there would be some decisions to be taken on welfare and on taxes, but that income tax, national insurance contributions, and the VAT would remain unchanged. So if you're wealthy, pay attention to what she will tell you on the 30th of October, okay? Trying to hide your cash before. I haven't said anything. I haven't said anything. All right, what's going on elsewhere? We had a bit of data out, a very decent unemployment report again in Japan. We know that the jobs market in Japan is still very, very, how shall I say, very tight, and this is not changing. Their migrant system is still not one of the best and one of the easiest to get into Japan for a longer period. So for as long as they don't do too much about it, their job market will likely still remain very tight. On the Aussie data, the building approvals a bit lower, the month-on-month data coming in negative, but it really had like very little impact on the Aussie overnight. Actually, Aussie wasn't doing too bad until the early morning. On the Chinese side, foreign direct investment still not doing very well, still very, very deeply negative. And then we move over to all the European data that came out this morning. French consumer not doing well. It's a pretty deeply red number. The prior one also had been revised down, nearly halved from 1.5% positive to only 0.8 positive. GDP, though, creeping up slightly. Prior revision, just a tick higher as well. On that side, it is doing all right. Those are Q2 numbers, all right? And we're already deep into Q3, but the Q2 numbers dropped today for most of the European countries. Moving down here, we also saw the Spanish GDP doing okay, a bit better than expected, in line with what the Q1 was. And the year-on-year number doing pretty okay. We've spoken about that in the past as well. Spain seems to be France being an up and down one, still those numbers are pretty anemic. Spain is one of those countries which is doing slightly better in the or live quite a bit better actually than the average in Eurozone right now. So that's good for the Spanish people among us. Italian GDP came out slightly better than expectations, but the revision was 0.1 lower, so that's still hopeful, but not massive growth. Then we had and I'm staying on the GDP for a while. Then we had the German GDP out, and the engine is still sputtering, okay? And even not sputtering, they're back into contraction. And that's still not very good. Although the euro didn't move too much on the back of it, probably the market already expecting everything that happens in Germany, which is a bit of a sore site. But we're also still in end of month trading, right? So the flows that we see right now in our mornings are likely driven by still end of month flows, and they tend to like distort the overall picture a little bit for that. For the euro, I guess we will have to really wait, as I said yesterday already, to see what the FOMC does tomorrow. I'm not even sure the euro picks a direction before. then moving on to the European GDP, helped by those other GDPs like Spanish and French doing a little bit better, Italian as well. It came out 0.1 better than the expectations. But if you look overall at the Eurozone growth is still very anemic, right? I mean, it's nothing comparable to numbers that we see in the US, for instance, where we had that 2.8 print last week, all right? Moving over to CPI data, we had a slew of CPI data coming out as well today. Spain coming down. It's now on the year-on-year July number I'm talking about. We had the Q2, Q2 numbers before, but the July number is starting to come down a little bit now, okay? But actually a negative print in the month of July. On the German side, then mixed picture. I'm going to call it overall sticky because we had some of the states printed still below 2%, for instance, in Hesse. But then we had North Rhine-Westphalia, and where is Bavaria? Bavaria came a tick down, a couple of ticks down, but still above the 2.5, around the 2.5. Bit lower than prior, but still well above the 2%. Those are two of the big states, okay, together with Saxony perhaps, and Saxony actually printed back above 3%. So overall, the German data were still a bit sticky. In between the GDP and the CPI, could that have done a few ticks for the euro? Perhaps, but I'm really not going to hang my hat on to those euro moves right here and now. Then the rest of those euro data, we saw business and consumer taken together 95.8, around the prior numbers. Business climate though negative, consumer confidence still pretty negative. Inflation expectations coming down a notch, and the sentiment wasn't really, the services sentiment wasn't really great either. All right. As again, it doesn't really have too much of an impact right now. We are rather trading month end, I think. One interesting one today. Yeah, Matthew, as you say, the concern is still Germany indeed. I'm not sure whether the China is really stealing business from Germany, but it must be in a way. Also, look at the levels of the River Rhine to know whether it's going to get better in Germany or not, and those levels are still extremely low. One that I would like to highlight again this morning is the Swiss KOF leading indicator. Okay, that came in pretty low compared to the expectations, and especially compared to the prior one. That is likely going to keep selectively Swiss under the cushion or just under defensive. And I'm also thinking that perhaps just for the month-end flows, although I've been saying yesterday as well, the models are far from clear. But I wouldn't exclude that we see a little bit of Swiss selling come month end, especially into tomorrow perhaps. But it's just take it with a bag of salt, okay? I mean, it's not really a major call that I'm making here. It's just a possibility that I'm not excluding, all right? What else is on the docket? Well, today, so we will have the confirmation of the German CPI a bit later on, but today we are having the first job data coming out of the US. We know that it's jobs week again, so we are going to have to monitor those labor data coming out of the US, and the first one here is jobs, and we have a bit of housing data as well, but also look at the consumer confidence later today, because that is one that the Fed is looking at. They want to protect the consumer, already hinting at and that's a bit of curveball, the labor market, they wouldn't want it to deteriorate. So if we would have a negative number here, that would likely trigger at least a comment from Powell tomorrow if that number would really be negative. All right. On the other side, if it's coming out better than, let's say, over 100, then things are still looking pretty good. All right. And I will talk about that, of course, in more depth in a bit later, and with Gregor, of course. What do we have overnight? We do have Aussie CPI for those trading Aussie. We do have CPI. We have retail sales. It is coming out, let's say, just before the Bank of Japan. So pay attention, because the market could be a little bit illiquid in the advent of the Bank of Japan decision, right? So if we would get a number which is a little bit away from the expectations, just pay attention, all right, to what could happen on the Aussie. I'll have a quick look at the Aussie, by the way, before we jump really into the Bank of Japan. And also, we do have PMIs coming out. The Chinese PMIs are coming out just before the Bank of Japan as well. All right. Okay, then moving over to the Bank of Japan. So let me straight away pull up the dollar, and it's easier to talk about something when we're looking at a picture, right? So the Bank of Japan, what do we expect? Well, there's a few possibilities here, and everything will probably be very touchy and could go either way right now. So there is the potential, and I've already spoken about it, like the big message, the big message would be that they raise interest rates by, let's say, 15 BPs and go up to a 0.25% on the top end of the short-term interest rates. And the other big message would be that they give in to what the mega banks were asking for, and that is really half the bond buying. Now, I don't think that halving the bond buying is really going on the cards, to be on the cards, because it would be perhaps too much of a shock to the government finances too. So I think that one is going to be a bit of a slower mover. And what I've also read, what the Japanese also think, is that they could reduce the JGB bond buying gradually, going towards that 3 trillion a month, but doing it gradually, like officializing the 5 trillion, perhaps 4.5 on the meeting, and that would then be more gradual, and perhaps the market will take it as a little bit of a in the middle of the road, okay? And I think then, and we need to take the combination of both, then we need to look at what they do on the interest rate, because there is going to be your next big message. And as I've already said yesterday, Bank of Japan is really one of the, although they do have the name, and the government, Hayashi, again overnight said that the Bank of Japan is independent and does with the monetary policy what they want and what they judge to be right. And I don't think it is particularly true. They do keep a very close eye on the government finances. So another weakening of the message would be that they go with less than 15 BPs hike. There are even voices in Japan, not in the majority, but voices are in Japan that they could do nothing with the interest rates today. And I think that part of the move that we've seen overnight in the dollar yen is perhaps already. I think there's some late month. Well, there's some month end involved there as well. But I do think that perhaps because we saw this move in the Japanese hours, this move pretty much quite impulsive move higher from right after the fixing here, the dollar yen started to move to ramp higher. I think some of the Japanese are perhaps expecting that they don't move overnight, which then would mean to me, and then we come back to what it may mean for prices now, those various possibilities. So for the time being, and it's actually been pretty docile along this trend line here. We stopped right on there around 155 and a quarter. Just above 155 is going to be where it's important, okay? If the Bank of Japan disappoint, this could really be toast, and we get back up to 158. I really think this would be a reaction. If they disappoint, the market will look at okay, the rest of the central banks is probably going to cut more, but the differentials will remain pretty large, and we could see a move back up. Do we get back up to highs? That's going to be that's a really tough call, but I do think we can get up to 158, for instance. Again, that is really within the possibilities if they disappoint. Okay, that just for the dollar yen, because tomorrow as well we'll have the FOMC, but I think FOMC, as I said just a few minutes ago, depending on what the consumer confidence data will be today, I do think FOMC is just a preparation meeting for September, so we should not expect too much on the back of the FOMC. We shouldn't expect too much of a change on the US yields, in my opinion. So it's all going to be down to the yen to make the move. So disappointment, depending on how big the disappointment is. If they do 0.10 and they do 1.5 trillion reduction in bond, it could be enough to have just a knee-jerk reaction and then start to slow down the move again. And I know that some people are looking for moves up into the 156s to get in front of this market again and looking for the next move lower, okay? Now, if they really would step hard on the pedal and go for a big reduction in the bond buying programs and a 15 BPs hike in interest rates and signaling that they are not done, all right, then we should see the Japanese yield really starting to spike higher. And I think then we are in for a serious retest of the 152, okay? That's going to be the big level that we need to monitor on the way down, okay? This is really going to be the make or break for the next at least two, three, four big figures. If it breaks 152, I think we could be on our way to 158.5, 149, and 148.5. Sorry, 149. All right, this is what I think this is a possibility if they really step very hard on the pedal, on the tightening pedal, okay? If we get somewhere a lukewarm report, it's going to be a bit jumpy, but I do think that the market has now reduced their positions a lot, okay? So I do think that there's some speculators waiting in the wings to see if they would underwhelm at all. So we could see an initial reaction a bit up and down, but then in a second wave, and that may come only when Ueda will have his press conference, because I do think he will have a press conference. Let me just, yeah, usually he does, especially if, after a meeting like that when they are supposed to change monetary policy, right? And the next big wave may have to wait until Ueda does his press conference about 3 hours after, 3 or 4 hours after the Bank of Japan release. Okay. I'm looking at and okay, before going further in what the yen does, I promised you to have a look at the Aussie. Okay, the Aussie to me is still ahead of relatively important levels here, which are 64.80, 65.10. If you trade the Aussie CPI tomorrow, keep an eye on what's happening there. All right. keep an eye on what's happening. 65.10, 64.80 on the Aussie if it would come out weak, all right? On the other side, I think it needs a break back above 65.80 to go and have a look back into the 66s. That for a little in between on the Aussie CPI, okay? You want Ali? Hi. Yeah, you want to look at gold, okay? Let's look at it, and then I'm going to have a bit of a dialogue with Gregor afterwards on all things yen. Yeah, gold. There's a bit of resistance around in these 2390s, whatever. I do think though that this washout, which also had to do with all things get me out of the yen. Has now sort of come to an end, and we are like in the middle of the road here. I know a lot of people are trying to sell the rallies in gold. A lot of people are trying to sell the rallies in gold. Okay, I am not particularly in that camp personally. I want to see it go below 23.5 before I give up on the idea, at least for gold, just after the washout continuing to go higher. And then still in the more medium term, I'm going to look at what's happening in the 22. So I'm not really in the short gold camp for now. I'm actually yesterday in the low 2380s. I bought just a little tiny bit, so I'm not on that side. It is indeed in the middle of the range, Gavin. Okay, we are going back onto the yen. I just want to show one more on the yen before I bring in Gregor. And this is the daily sterling yen. So we had this whole washout in all things yen last week. Look where this stopped, right on the bottom of the daily cloud, okay? So for tomorrow and the day after, we will have the Bank of Japan, we will have the Bank of England, okay? So if you want to trade sterling yen, well, first of all, I am probably going to wait until the Bank of England to do anything in sterling yen as such. But keep an eye on what's happening here in that sterling yen, okay? So now, tomorrow, the day after, the bottom of the daily cloud will be somewhere in the 196s, 196 3/4. So this is about 0.5%, yeah, 196, 196 3/4. For when both will have happened, keep an eye on that support zone, okay? If you start to break below, hold below the cloud, there would be a potential for a big move lower on the combination of the Bank of England. Now, having held it, it may also mean that we are going to, on setbacks, we're going to find buyers there, okay? So if we get a retest and if we start to bounce here, I might actually start to get interested in doing the other side on this one. But I'll wait for the what the jury has to say on both Bank of Japan and the Bank of England. All right, Gregor, are you around, my friend? And are you ready to share some wisdom on, especially I say on the yen, but whatever you like to talk about, the stage is yours, mate.
Yeah. Okay.
Yeah.
Yeah, you can see it. Okay, so dollar yen, as we already discussed yesterday, and I also think that Japan will probably do everything what's needed to keep Japanese yen strong. So in my opinion, any rally is still going to be potential opportunity to catch the downside here. And I'm looking for some very nice resistance here around 155.70 up to 158. So we are slowly coming into this area. Not sure if we will get that high, but definitely I am expecting more weakness after this very nice bounce. Now, also I am obviously looking at yen process like euro yen and pound yen. So you mentioned pound yen. I've been just looking at it, and it looks like we have a pretty nice broken channel here. And it looks like that around 200 area, we also have these swing highs that goes back to April and May. So technically speaking, it's a very interesting level. Odds increased a little bit for Bank of England cut. So maybe the market will also position itself for a potential resumption to the downside, especially if we consider that there can be a very big divergence between central banks. So I think that there is a lot of more downside potential here, and 200 is certainly the first area that I would watch for potential new sell-off here. Also, if we look maybe on euro yen, this one obviously also has seen a pretty nice drop. Now I'm tracking just a counter trend rally here after this very strong sell-off. So this pose is totally normal. And like I have been saying before, always when you spot or just tracking the counter trend movement, it should be structured by 3 legs. So here I would be looking maybe for slightly more upside. Maybe euro will do a little bit better than pound, but then 169 or so is the resistance area that I would be watching for potential next sell-off. So as I walk you through all of these yen pairs, I just think that there is a bit of more downside. But of course, it's not easy maybe to identify the risk rewards at this with this price action, because the pullbacks after all are still not that deep on plenty of those. So that's something that you definitely have to consider. You mentioned Aussie as well earlier.
Sorry, Gregor. Yeah, it's interesting that a lot of those yen pairs have broken channels, right?
Yeah.
And in that big washout of all the yen positions. What in your because the channels we have to when we look at all those channels, they're looking relatively steep, all of them, right?
Yeah.
So does it mean something technically to you if we get back into the channels or not, or is it, or are they just a bit too steep to really say like we're back in the channel now, it's going higher? I mean, for
Yeah,
me,
I mean,
and
yeah,
I've got all those channels marked as well, but for me they all look a bit steep.
Yeah, I mean, to me, the most important rather than channel is the price action itself. And if here on ASEAN, I mean, we got a pretty strong, sharp sell-off here. So even if we would rally back into this channel, I would still tend to look for this to be just a deep recovery before market moves even lower. So even if we get back into the channel, I would be looking for more weakness, because this was pretty aggressive sell-off. And I said earlier, corrections are rather in 3 waves than in 1 leg. So that's why I would continue to look for more weakness here. And of course, if we consider what stocks are doing, of course, ASEAN, those pairs are even more sensitive to risk of new pain. Or we can wait just a second. So here we have stocks, the S&P 500. I mean, so as we discussed yesterday, if maybe some of today's viewers were not there, I'm saying that, and I'm thinking that stocks have more room for more weakness, that we are in a corrective phase that could even last till end of the summer. So this makes me think that whenever stocks are going to experience further weakness, that ASEAN and those pairs will likely stay on this camp as well. So on this track. So I just think that but obviously if we get back into the channel, risk reward to join the trend could be even, or entry or levels could be even more interesting and better than going short market right here. But we certainly have very important event in front of us that could give us maybe some interesting opportunities still. Now looking at ASEAN, inflation data is going to be out tomorrow. But since we are in a risk-off mode, even if inflation will come out hot, I just think that there could be even better levels maybe for Aussie to stop at the resistance. So I still think that there is room for more weakness. I'm looking for 0,600, 6,600 as a very nice resistance. Also swing lows here from this previous range. So I'm thinking that Aussie has actually room to maybe retest this lower trend line here that goes back all the way to October 2023. I don't expect any major breakdown, but I just think that this current sell-off is pretty strong one and that is pointing us towards the lower side of the range here, especially if we will stabilize a bit. I just think that there can be more weakness. Also, metals, obviously gold itself has a very important impact on the Aussie as well. We are now at this trend line, still thinking that we can retest this resistance zone from where I would be looking for a new sell-off, as we discussed. I think we covered, yes, also yesterday about gold, so no change here. For now, still thinking about this midweek reversal that can occur after we'll get plenty of news out. Also, maybe it's worth to look at dollar CAD. Now, dollar CAD here is breaking some, is trying to break out of this big triangle here, still thinking that crude oil and the S&P 500 have room for more weakness. So I would be looking to buy the dip here. I think that 1.3780 is a pretty nice support if we get there to join this potential breakdown. I think that breakout. I think that this risk reward is could be pretty interesting here. Also, let's not forget that crude oil overall, the sentiment has been changing quite dramatically lately. But always when we were at the lower side of these ranges, people were starting calling a breakdown. Then up here, starting to looking for 90 and 100, but obviously we are still stuck in the range here. But I think that there is room for 73, possibly even lower if we start breaking this lower trend line of this triangle, and that's maybe we will see if that it's more linked to lower demand, or maybe this will help to bring down the inflation as well, and possibly even will put some downside pressure on yields.
It's funny that geopolitics, the geopolitics impact on oil has dramatically changed over the past year. Let's put it that way. Because we have all those issues in Ukraine, in the Middle East, but oil has stopped responding to it, barring the occasional couple of hours blip. It does look like a pretty negative picture, this one still.
Yeah, even Turkey announced that they could attack Israel, something to defend Palestine.
Really? So, wow, I haven't seen that.
Yeah,
That would be something.
They announced this during weekend, I think he said.
Yeah.
The president of Turkey. So, but I obviously expected that crude oil would stabilize a bit, but it didn't. So it looks like as you said yourself, it's responding quite interestingly here. But overall, I mean, if we consider because I'm looking at crude oil more like a link for dollar CAD at the moment and risk-off environment. We know that CAD and crude oil are losing correlations from time to time, but at this stage, it looks like that. At least now it looks quite interesting. I have another reason why I could be looking for this breakout higher on dollar CAD if crude oil is also pressing to the downside at the same time.
But also, I mean, if you look at an interesting, tomorrow we will get it's May data, but still tomorrow we will get Canadian GDP as well. Canada just chooses when it jumps onto the oil bus or not. But I do think with the data coming in a bit weaker, the rate cut, McClem not being very stressed by the differentials that he's creating versus the Fed. It still does support in my opinion anyway, the Canadian dollar being a little bit weaker, albeit we have seen the positioning is perhaps a bit stretched. Although I'm always very skeptical to look at those COT or whatever data, because they don't paint the whole picture of the market. But yeah, thanks very much.
Yeah, that's it. I mean, that's it what I have for today. Maybe just a quick touch of the euro.
Yeah.
We said yesterday 108 is a potential support. I still think that this Tuesday reversal is playing out pretty nicely, but I would be looking to sell rallies anywhere around 108.70. I still think that's a pretty nice resistance up there here. That
Euro is just a pain in the bum right now. I mean, it goes up and down 50 points and that's it, you know.
Yeah, and you would expect to be much more volatile with this recent risk off that we had. So
yeah, and it is not, because it's just one big bag to do everything else, you know. It is just a huge waste bin. Well, I mean, there's always intraday trades to be had, but I get for any trend to develop, we are going to have to break that big triangle, right?
yeah,
that's the only way to start creating a trend in the euro dollar. And also, as people know in here, I'm always looking at how the option fields look like, and we are really at low levels of euro volatility, and the options market needs to get nervous for the euro to really start moving as well. So and for as long as that doesn't happen, we are going to have to play within a relatively small range. Unfortunately, on the euro, that's my view anyway. Thanks very much, Gregor. That was very informative once more. Oh yeah, let me just grab the screen back for last one. And oh, not that one. Sorry. Yeah, Ali, to reply to your sterling question, we will do a Bank of England special tomorrow when we do the roundup of the or even on Thursday. But it's really a limit border case now, whether they can or not cut, and what they plan to do. I just wanted to share one here, and there's been a bit of a debate about the trend line or not. I've taken this trend line here in dollar Swiss. I know it's got a bit higher above here, but it does align a few interesting levels. 88.80. We came very close again this morning, and now we are shying away from it. So keep an eye on what's happening at 88.80. The other possibility of this trend line is this one, but then we are talking rather about 89, the figure. So whichever, as DK was saying in our room, whichever works for you is a trend line. Do you have any opinion on this trend line? Which one is it, Gregor? The lower one or the higher one that we should take, that we should look at?
The higher one, because if
the higher one.
Yes, because if the higher one is broken, you have more confirmation that the trend is changing.
Okay, all right then. Okay, then so then it's you have two levels then to watch, 88.80, because it's been a big level in the past, like so many times that we have traded around this 88.80. We can hardly keep count of them. So 88.80 is there's always been a bit of a level of attraction in the Swiss, and then of course keep an eye on 89, the figure, if we continue, sorry, to move a bit higher. But if you look at the overall picture, is still one that could be corrective, but still looking a bit ish for now on the Swiss side. Any thoughts on dollar mix? Yeah. For me, it's a difficult one right now, Matthew, and because I'm not seeing a lot of clarity in what Scheinbaum wants to do, but we did reject that 78.6, but if you look at the overall move, that is it's hard to stand in front of the in front of it right now. I'd say 18 and a half, yeah, 18 and a half, 1870. Then you have like a lot of levels up there, up to 19. I would feel more comfortable to sell it on a break back below 18 and a half than standing in front of it right here. I mean, it's just personally, I'm not really involved. I know people are trying to sell here. I think some extensions also as well, but to me, it's still looking quite big, this one, and the more we risk having those anti-investors regulations coming through in Mexico, the more we risk going higher. Now, I would say if we get to see polls in for the U.S. elections veering the other way, let's say, because for now that's still not the case, but let's say that Kamala Harris finds so much support everywhere that she's catching up on Trump and even surpassing him, then this may be a very, very good trade again to start to go short, despite what Scheinbaum and AMLO still have in the bag to do. Then it could really be a very good trade again, okay? But all right, first of all, guys and girls, be careful for the Aussie CPI, Bank of Japan, and we'll talk to each other again tomorrow to see what happened there. Thanks very much for coming to the Flow Show again today. Thanks very much, Gregor. We talk to each other tomorrow. Have a safe trading day. Thanks, people.
Bye-bye.